All right, so I want to take a quick minute and connect and share some thoughts in reference to the global liquidity issue that's underway right now, and a lot of it has to do with the Japanese yen and how the yen carry trade has played a major part in the global liquidity, I guess, availability that the U.S. and the Japan have, for the most part, to create this monetary illusion that's before our eyes. And so, I want to take a minute and share some thoughts in reference to how things might play out and what should be of concern to everybody, which eventually will work its way back into the banking system, which will put pressure on the central banks to have to respond in some way. And of course, we know how that might play out. So anyway, if you guys want to see more of these little quick takes, definitely make sure you hit that thumbs up button. Leave a comment down below so that I know that these type of videos here are touching home with a lot of people as far as understanding monetary policy, so you can stay one step ahead of the mainstream narrative. But sweet and simple, for decades, the yen carry trade has been one of the most foundational pillars of global liquidity. It's not something new or something you really hear about on mainstream news, but it's quite, it's been popping up a lot lately, inflating asset bubbles and providing cheap money to the biggest players on Wall Street. Now that the foundation is starting to crumble, it looks like it could take a lot of global financial system down with it. So that's something that we definitely have to unpack right now, because this does matter, even though your average person don't know nothing about it or care about it. So, but the question is, what exactly is the yen carry trade? And so in simplest terms, the yen carry trade is when investors borrow Japanese yen at extremely low or negative interest rates, and they use those funds to invest in high yielding assets elsewhere. So basically, Japan's ultra loose monetary policy, which started back in the 90s, has been an open invitation to global speculators to borrow dirt cheap yen and then chase high returns anywhere around the world. So that sounds all fine and well until it doesn't work no more. And that's what we're witnessing now. So the problem is that when traders unwind their trades, the whole game changes. So investors have to then buy back the yen they borrowed, and that means liquidity assets, often at a loss to cover those positions. So this can dry up liquidity in the financial markets at a very alarming rate. And as liquidity disappears, so do the inflated asset prices, which is what we've experienced. So the next question is, why is the yen carry trade collapsing now? And it has everything to do with Japan's interest rates at rock bottom levels fueling this carry trade. But now Japan's central bank is slowly starting to raise rates to stop this destruction of the currency. So since 2013, the yen has been weakening steadily. Japan's aggressive monetary policy, which we all come to know as economics, was kind of the leader of that. But, it's combined high fiscal spending and constant money printing to keep the yen relatively suppressed to boost Japanese exports. But, this can only go as far as they could actually get this game going. So Japan had actually taken steps to raise interest rates to stabilize the yen, which has led to massive swings in currency market devaluation. So the dollar-yen exchange for the last 34 years has been relatively stable, but it's dropped as the yen has strengthened, which means that carry trade is now in full swing unwind, causing a lot of global shocks. So the next thing I think that really people should think about is, how will Wall Street respond to this game? Now, here's where things get a little bit tricky and interesting, because Wall Street's biggest banks like Goldman Sachs, JP Morgan Chase, and Bank of America have been heavily involved in carry trade for years now. So their clients, including hedge funds and private equity firms, have leveraged, cheap borrowing costs in Japan, making risky bets on assets around the world. And of course, as usual, they did this at an extreme levels of leverage, because when there's free money on the table, greed kicks in and people really go crazy. So the problem is now that when things go south, they often go south very fast. Leverage unwinds, and the unwinding of this carry trade means investors are scrambling to cover the yen-denominated liabilities. So this requires selling off of assets, which can then send shockwaves to the market. Therefore, Wall Street banks are already starting to feel the pain, of course, with their underwater and securities. But JP Morgan's steep drop down 7% intraday is a big telling sign of what's going on. So could the U.S. banking sector be next? That's what we're going to have to wait and find out. See, we have to remember the banking crisis from 2023, the collapse of regional banks like Silicon Valley in March 2023, sent shockwaves throughout the system. But is this the crisis, is it really over, or is it just starting to really brew again, into the system again? And this yen carry trade unwind definitely could drag down a lot of banks with them, because they're all interconnected. So Wall Street right now is on high alert. They're extremely concerned. And the U.S. consumer particularly, which is the bottom 90%, is starting to crack as well under pressure because of high inflation, stagnant wages, rising interest rates. So Warren Buffett's recent dumping Bank of America stock is a signal he's seeing something wrong in the consumer sector. And Bank of America is one of the largest consumer banks in the U.S. And if Buffett is jumping ship, that's definitely a red flag. So, the cracks are showing and things are starting to really unravel, but it's not yet. So can central banks save the day? It's going to be the final and last question. And so with the Federal Reserve have to literally come in to save the day, the entire global financial system is literally teetering on the edge right now. So we'll see, how this move shakes out. But central banks will do what they always do, which is print more money. And the only real weapon they have is to provide liquidity. So sure, they'll give, money printing, some type of scheme, some type of fancy name, quantitative easing, emergency liquidity programs. But make no mistake, that's the only game they have. It's the same old game. So the problem is that throwing more currency into the system only delays the inevitable. It might prop up things in the short term as far as asset prices, but the cost of further destroying the value of the currencies like the USD or the Federal Reserve note, those cracks will definitely impact and improve the strength of hard currency. So the bigger picture here, the unraveling of this yen carry trade is more than just, a technical issue in currency market. It's a symptom of a much larger problem. So for years now, we've been living in a world, just flooded with just fake currency, inflating assets and unsustainable debt. So this yen carry trade, was one of the hidden engines powering this machine, but now it's breaking. And when that liquidity dries up, it won't be good for Japan, the US, and the rest of the world because the financial system depends upon it. So this is a story I think is worth paying attention to, especially if you want to understand what could be the next major financial crisis. So we're not there yet, but the warning signs are flashing red in many ways. And I just want to keep you up to date with what's going on so that you won't be left out in the cold wondering what happens when this deck of cards come crashing down. And so as always, I hope you found value here and just trying to share some thoughts, get, all these thoughts out so you can realize what's at stake here, because ultimately you as the user of the currency will be trapped in the middle and be the casualty of this monetary manipulation if you don't understand the importance of sound money at this current moment. So I want to encourage you to continue to educate yourself, diversify your holdings entirely, understand the difference between fiat currency and sound money. And more importantly, if you want to take advantage of this opportunity, I would encourage you to look into opportunities to be in the silver game and gold game, because that is where the future is heading. So what I've done myself, I put together a team utilizing system, being able to help people automate their silver, help other people, and they get compensated for it, and then they can return buy more silver. So it's a perfect networking system that allows people to, become their own silver dealer in a sense. So if you're interested, mysilverteam.com is where you can go check it out. Links in the description here, and just educate yourself and stay plugged in. But anyway, hope all is well. Enjoy your day. I'll catch you guys later.